Hello and welcome to today's video, which is called Non-Farm Payrolls are to Stun the Markets. So let's dive into the clues to decipher which way my prediction is going to work out and the aftermath in which markets would react with their price moves. Of course, first a few words about the tragic fires in California. It's a great disaster and countless human tragedies, actual human tragedies. So let's hope that folks find the typical spirit to get back on track. So thank you for liking, subscribing this video. You pretty know well my site, and what I do for clients. And let's dive into the closing figures of 10-year and 2-year yields. We see long end of the curve still rising and the short end reflecting less willingness of the Fed to cut as well. That of course means that the US dollar is going to be marching higher, and the same goes for yields. That's at least the positioning that we are seeing in the charts before the all-important data release. Cryptos are leaning the risk-on way, and we see quite similar budding positioning in S&P 500, Nasdaq, and as well in Russell 2000, meekly joining with their refusals to decline some more. And these clues are, in my opinion, telling, because the 92 to 93,000 Bitcoin support again held, and the same applies to yesterday's Carter day. Quick dive into the figures. Given the preceding data, I don't think that we should be expecting high government or manufacturing payrolls this month to be reported, so their contribution is going to be on the low side towards the headline figure. However, private payrolls are likely, in my opinion, to beat the reasonably humble global consensus forecast figures, meaning that the headline figure would come at least in line with expectations, which would have the positive effect of not letting markets consider the upcoming recession, because it's not on the table, immediately speaking. And that would mean that the renewed confidence about corporate profits being for now safe would be reflected in reflexive slowly upside resolution in S&P 500 within the current trading range. It must be considered as a trading range, which you can see here, including the stellar deterioration of market breadth right before Wednesday. For now, the picture is kind of stabilized, and I'm not looking for a tremendous break to the downside on the non-farm payrolls later today. So this is roughly what I expect macroeconomically, and how markets, equities and bonds would interpret the incoming figure. You know pretty well what I do, and this URL on the join page will help you select what's right for you given your style and trading preferences. Obligatory disclaimer, and let's talk later on Twitter and Telegram as always. Have a great day.